money. Welcome to Cramerica and Dreamforce in San Francisco. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to try to explain all this. So call me at 1-800-743-CBC or tweet me at Jim Cramer. Look, some days just start out plain old ugly. And when I say start, I'm talking about the overnight market, the one you can see when you get up early, you watch that ticker underneath the anchors talking on CNBC. All sorts of speculative stocks were just getting clobbered. Sell. And it made me think that, well, maybe they take the whole market down with them. Sure enough, they actually did. And we got a hideous opening with tech stocks like the ones we're going to hear from today when we speak to the CEOs of companies attending Dreamforce. Of course, this is that festival of all things tech brought to you by Salesforce.com. Well, they took the biggest hit. Then out of nowhere, Jay Powell, the chairman of the Federal Reserve, spoke about how the economy may need the Fed's help. And the whole market turned up like it always does. But this time it was led by different companies. It was led by the bank stocks. And they are so important to the health of the real economy. I cheered. Unfortunately, later in the day, the president came out with an antagonistic post, yes, on Truth Social, and made it clear that the China talks aren't going well, and that erased a big chunk of the gains. Dow ultimately finishing up 203, but the S&P dipped 0.16%, and the NASDAQ, a lot of tech over there, well, it tumbled 0.76%. Geez, I mean, what a thing we got to go through every day around here. I mean, it's kind of nauseating. Anyway, it turned out, well, let's face it, it was a good day for the real economy and a not-so-hot day for the artificial intelligence economy or revolution or whatever you want to call it. But it's not what dominated the action. And even Salesforce fell 3.6%, an affront to where we are, frankly. No, this move was about anything that we've seen, nothing like we've seen in the last few weeks. When the market roared earlier today, it was all about the non-data center parts of the economy, the Rip Van Winkle economy that's been asleep for ages, frankly. It was about the Fed being worried about the real economy, and Powell made it clear that more cuts were ahead, and he talked about stopping the Fed's endless bond selling. Why do we care about this? Because we've had nonstop selling of the Fed's mortgage bond holdings, and that has helped to keep mortgage rates much higher than they should be. When we measure the real economy these days, we think of first housing, and we should. It's huge. Plus, the real economy's been hobbled by all sorts of issues. We've had the tariffs, and then more tariffs, then fewer tariffs, then 100% tariffs, then, well, who knows what the heck. I mean, today the president talked about blocking Chinese cooking oil in retaliation for not buying soybeans from us. And that's what freaked people out at the close of trading. It would have been a nice day otherwise. Now, it's no way to run a railroad, to name a group that, by the way, that's gone from nowhere because we're so confused about real demand, made even more difficult by the lack of real data from the federal government's in shutdown. It's impossible to figure out how well we're doing because nobody can truly see through the impact of the tariffs, and we don't even know about our nation's employment stats. I think we're all flying blind. So how do we judge the so-called real economy then? Well, first, I do like to look at the banks. They're the backbone of the real economy, and they played a positive role today. JP Morgan reported it's always good numbers, but its stock had run up so much yesterday, it ended up giving back some gains. Wasn't representative of the action. But you know Charlie Scharf? Well, you should. He runs Wells Fargo. In fact, he saved Wells Fargo after one of the worst non-existential scandals in banking history. Charlie's all about reliable, positive earnings. He's about delivering, but he hasn't been able to deliver because 7 long years ago, the Federal Reserve slapped an asset cap on Wells Fargo. It was devastating, and Charlie had to redo everything about this bank, top to bottom. The Fed's now lifted the cap, and lo and behold, Charlie's turned Wells Fargo into a hub of commerce, including corporate finance with a huge amount of stored-up capital. Today, he told an amazing story about a bank with tremendous earnings power. Wells can buy back stock. You can grow the institution. It stands as a perfect metaphor for the real economy. And that's why that stock led the entire S&P 500. It's been a long time since I've seen a bank stock lead the S&P 500 with a 7% gain. That's right. A bank stock had the biggest advance, making me look like a genius for once because we own Wells Fargo for the Capital Trust. Right underneath it was another driver of today's rally, Builders First Source. When you can only rally, you can rally when you have a housing market. That thing can't go up if you don't have a good housing market. Maybe we're going to have one. And you know what? They have projects in hand if Builders First Source is doing well. Maybe mortgage rates really are going to fall. Perhaps the worst acting stock in the Travel Trust of late is Home Depot. It's been straight down like it's wearing cement galoshes about to take a swim in the Mississippi. Not today. The despot and its doppelganger Lowe's came roaring back today. That's the real economy, once again, not the data center. Now, of course, we don't want the data center to be down, but we're seeing some signs of something that represents a change of pace. Look, we love NVIDIA around here, you know that, because it owns the market for accelerated computing and generative AI. Or maybe I should say owned, because today Lisa Su's AMD won a big order from Oracle to supply chips for its data center build-out, which happens to be the biggest in the room. Well, let's call it the world. Today, the market disagreed. NVIDIA got hit while AMD barely rallied. I don't know. Anything data center, not so good. Well, why? But, you know, keeping with the theme of competition, Walmart and ChatGPT teamed up. That's what ChatGPT being the spawn of OpenAI, for a new e-commerce initiative, and that knocked down Amazon again. Yep, competition in the AI data center world does not help the story that has moved stocks up. I've always liked the market that's led by the banks, though. I want the data center tail and the tail of speculation take a back seat in this market's SUV. Maybe put the quantum and nuke stories in the way back. Why? Because the temperature had gotten too hot around here. The bottom line is that this market's gotten way too hot altogether. We could use a dose of the real economy. Today felt great before the president turned up the heat on China again. Hopefully he'll take a more conciliatory tone and we'll bounce right back. When he does, I think we will return to a real economy rally because the adult in the room, Jay Powell, has our backs once again. Let's take some calls. Let's go to Tammy in Florida. Tammy.
Booyah, Jim. Tammy from Florida. I'm a first-time caller and a new club member. I retired from teaching.
Excellent. Thank you.
And I joined the club to learn how to invest, not trade stocks. And, Jim, I'm so happy to hear your voice and personality narrating your new book on how to make money in any market. Okay.
You're very kind, Tammy. Thank you so much. How can I help you?
Okay, in my stock garden, I planted a small plot of Dover seeds 4 months ago at $183 a share. While Dover is weathering a rainstorm, Jim, should I buy more to increase my position and reduce my current cost per share?
Okay, so Jeff Marks and I talk about this stock a lot. It's been very disappointing. I don't think it should be disappointing. The company's very well run. It's got a lot of firepower to be able to do a buyback. I think you should buy more. We were tempted to buy more. We actually just did some last week for the Travel Trust. Jeff Marks and I are reluctant to buy even more right here, but I do think it's in very good shape. And I thank you for your kind words. All right, look, this market's gotten a little too hot. I think it needs a dose of the real economy, and it got one today. And I'm grateful. Mad Money tonight. Domino's jumped after earnings today, so should investors get a slice of the pie or wait for the stock to cool down before taking a bite? I'm getting all the latest with the CEO. Then we couldn't spend the day at Dreamforce without having a conversation with our host. Don't miss my wide-ranging interview with the CEO of Salesforce. And how is tech consulting evolving in the age of AI? I'm sitting down with Accenture's top brass to find out. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.